India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, good morning.
Hi, good morning. And today is also the last day of Navratri. Tomorrow we celebrate the Sera. So here's wishing all our viewers a lot of health, prosperity, many good starts.
Well, that's right. And I don't know what's more tricky nowadays, right? The markets or the weather.
Yeah.
Last night there was a severe downpour. I was wondering whether or
Lightning, thunder.
It was flooding, in various pockets of Bandhan.
I thought the monsoons are back. They would retreat and then they're back.
And mind you, it's not early October, it's October 10th, when we're getting these sort of rains. So quite something last night, but good to see stability and the weather gods are clear.
On the way here, my daughter was with me and I said, well, there's the hurricane in the US has also made landfall. So she with a poker face told me, what do you expect with climate change? Such.
Even I have.
So, kids nowadays.
Wise words.
Absolutely. And so we'll get to the hurricanes and the lightning and thunder as we go along. Will we see any of that in the market? I don't think so. I think we have a very, very flattish kind of handover from Wall Street last night. But I want to just start with just one line, that the domestic equity money, that freight train of money is unstoppable. And we got the number yesterday around the last hour or so, and that continues to come in. The SIP number is 24,500, which means it's basically hit another record high, right? So I think everything you throw at this market, it's held on steady because the local money has been unshaken, right? That crowd, if you could describe the local money as just one large pool of long-only fund, they've been constantly sending checks in. And I think that is the reason why markets have been what they have. So we'll come back to this in greater detail. As I said, from last night, no big overnight cues. US equities mildly lower. S&P was down about 0.21. Yields and dollar are flat, not very much at all. US core CPI came in slightly higher than expectations, but actually there was a whisper number. It was in line with what the whisper number was, 0.3 compared to 0.2, which was expectations. Lots of Fed speakers, many of them were voters on the FOMC, the rate decision. And there was one particular gentleman who said that he's okay if the Fed did not cut in November. He's okay with a pause in November. So, there was a bit of outsized focus on that one statement. But there were others who said, well, they think inflation is coming down. But I think this, because it was out of consensus, is what stood out. Market expectations are still for about a 25 basis point cut in November. Oil prices have jumped. So they were cooling off a little bit, but 3.5% higher. About $79 a barrel is where we are at as far as Brent is concerned. And, markets are watching any escalation from West Asia, from the Middle East. Late last night, there was a meeting in the Israeli Security Cabinet. It's strange, right? Israel is saying, well, we'll escalate, but it won't turn into a war. Iran is saying, well, if you retaliate, we will retaliate, but we don't want war. But I don't know if it's blind leading the blind or, it essentially is going to be as planned and as smooth in terms of, both striking each other in a coordinated set of actions, well expected, well anticipated, and we move on. We'll have to see. You got US third quarter earnings, which kick off on Friday, which is today. So JP Morgan and Wells Fargo, expectations are that they will report good numbers. So these are cues which will be important when we come back on Monday. China, on Saturday morning, we'll have the fiscal announcement, right? 2 trillion, 3 trillion RMB, the size, scale of what they want to do. But one thing is clear. China is once again, after a very long time, being reactionary to a fall in equity markets and generally a fall in risk assets. We've not seen that at least for the last 10 years. So maybe, that's something to watch. Just to circle back the levels, not very much different from where we left off yesterday. The Nifty major hurdle is at still the 40 hourly exponential. For the last 2 days, day before yesterday, we got to it and then sold off. Yesterday, we didn't get to it. But 25,144 is that level now for the Nifty. And further upside, if we cross this and we sustain above this 40 hourly, is the 50 and the 61.8% retracement, which the numbers don't change. We put these out yesterday as well. On the downside, the low from 2 days back, I think has to remain unbroken for any of this to work out. 24,694 is where that number is at. On the Nifty Bank, we closed higher and we did actually end around that 40 hourly exponential, 51,558. So number one agenda, of course, is to build on it and sustain above it. And if we do that, you're essentially looking at the same 50 and 61.8% retracement levels, 52,330 and then 52,835 on the way down. I mean, 51,994 was the low, but that's a range which the market should not break down below. Yesterday, Nifty Bank had it good. Lots to track. TCS reported numbers as well. But overall, looking at the picture and looking at what is lined up ahead of us, maybe a little bit of a quieter session, at least as far as indices are concerned. We'll get to stocks in just a bit. GIFT Nifty on your screen. Rima.
Hi, Prashant. So just to put some numbers on board, first the flows figure for yesterday. So DII's net bought about 3,878 crore in the cash market. The FI sold more than 4,900 crore. But look at the money which has come in and out for the month of October. Now, the FIs have been selling. In the month of October, they've sold 54,000 crore rupees. The DIIs have matched that, almost penny to penny in terms of inflows. But yet, the outflow from the FIs have been so strong that the Nifty is down 3% in the month of October in the first 10 days. The mid-caps are down 2% and the Nifty Bank is down 2.7%. So despite the DII inflows matching the FI outflows, markets are still lower. Now getting back to IT, and the question is, will IT sour the mood today? Because TCS reported a margin miss. Their international revenues declined by 0.4%, and it's the first time since COVID that the international ex-of-India business has seen this kind of a decline. So that's disappointing. Tata Elxsi reported a muted 0.2% constant currency revenue growth on a quarter-on-quarter basis. So is this a TCS-specific issue? Because TCS is more of an industry bellwether compared to Tata Elxsi. But results next week, and most of them will be reporting next week. It starts with HCL Tech on Monday. On Thursday, Infosys, Wipro, LTI Mindtree, the other three, Nifty constituents in the IT pack report numbers. On Friday, you've got Tech Mahindra. So the picture will be clearer. Whether the recovery in IT is delayed because we haven't seen signs of it in TCS, or it's a TCS-specific issue. That said, when it comes to TCS, bear in mind that in the last 1 month, TCS has already underperformed peers by falling nearly 6%. So is part of the muted numbers, bad news that we've got from Q2, priced in already? Also want to put on the table the movement in the individual IT stocks since 1st of June, which is when that mega IT rally began. Well, TCS compared to the others hasn't performed as well. So TCS since 1st June is up 15%, but Infy, HCL Tech and LTI Mindtree have a gain of 35%. So TCS has not just underperformed in the last 1 month, but even in the last 4 months since the IT earnings began. And also just one final word, next week, I think it's going to be earnings full throttle, right? So Prashant spoke about US today. We've got Wells Fargo, JP Morgan. Saturday, we'll watch for, the China-Beijing stimulus. But pull up next week's earnings announcement. We've got Reliance, we've got Bajaj Auto, Axis Bank, Nestle, ICICI Lombard, HDFC, AMC, important mid-caps like Havells, Polycab. So lots to track.
Well, that's right. And this morning, in fact, we are bracing ourselves for a bit of a weakish start because of 3 big cues. One is the tech stocks. They could be a little bit under the weather post the start that we have seen from TCS. You also have the Fed speak that came in, and that wasn't very, very encouraging because suddenly there are some doubts about the November rate cut. Most, if you look at the tracker, they are still leaning towards a 25 basis point cut, but overnight there were some jitters on that front. And crude oil prices, well, it's back closer to around $80 per barrel. So that's why a bit of a softer start is what we're likely to see. The big question is what's going to happen for tech? Because yesterday there was a sense, if you look at the intraday chart, the index itself ended at the low point of the day. So the street was sniffing that maybe TCS could come out with a bit of a disappointment. And as Rima said, getting into its numbers itself, TCS has been an underperformer. So will this dip that we'll see on TCS as well as on tech get bought into? JP Morgan, well, they came out of the note, and towards the end of the note, they say that in case there's any sharp correction, they'll be buyers on that stock. So I guess the street is buying, tech more for FY26 and post that. If that's the case, this dip gets bought into today. So we'll keep an eye out on that front. The Nifty Bank, that found its form yesterday. It was very, very strong in trade yesterday, and it crossed both the 100 as well as the 50 DMA. the bulls will want to see some follow through. It could start a little bit soft, but then that dip needs to get bought into. And the good news yesterday was private banks came back to the party. HDFC Bank, Kotak Mahindra Bank, and they have been lacking in terms of participation. So both those two perform. This holds the key for even today's trading session. What about positioning on index futures? Both of them are going their own ways. The FIs, they added some shorts in yesterday's trading session. The clients, they added more longs in yesterday's trade. Now, pulling up the options data, we started a new, new contract for the next weekly expiry. And the 25,000 call, 25,000 put. So to call it, if someone is writing both these two strikes, it's a short straddle in place. That is, you pocket the premium of close to around 350 rupees or thereabouts, and you get a broad range, which is closer to the lows that we saw earlier this week, 24,650. While on the upside, around 25,350. Those are the markers on the Nifty in the near term. And I think the markets could spend a few sessions in this band itself. The stocks that I'm focusing on, one is Bandhan Bank. There's an update that's come in there. They have appointed a new MD as well as CEO. And the banker that comes in from the PSU space. He has had stints at SBI as well as IOB. And the street will like that because of a PSU banker coming in with a good amount of experience. That's a positive. The other factor is that they had claimed for a particular amount. They've got close to around 1,300 crores, which is much lower than what they anticipated. But at least there won't be any further provisioning. So Bandhan Bank is the stock that I'll be tracking. The next one I'm looking at is BSE, being the big outperformer this week itself. And yesterday you had news that NSE, they're going to be retaining Nifty as the weekly expiry contract. Well, this could tilt the scales in BSE's favor because most bulls on NSE thought that maybe they'll opt for Nifty Bank. But they've gone with the Nifty. So that's why BSE could accelerate their market share gains. I'll keep an eye out on both these two stocks, Bandhan Bank as well as BSE.
Interesting. Thank you very much for that, Nigel. Let's get to the equity calls then. Chris Wood of Jefferies says, greed and fear continues to believe the biggest near-term risk to markets remains geopolitics. Still, there is no doubt that the main topic of discussion this week in meetings with investors in London has been about China. He says there is no doubt that the Chinese authorities have succeeded in raising expectations, but still, for greed and fear, the key near-term issues are the details of the coming fiscal stimulus and the details of any bank recapitalization. He adds there have been press reports that China is considering injecting up to 1 trillion yuan of capital into its biggest state banks to increase their capacity to support the economy. In the meantime, he says any pullback ahead of these announcements should be viewed as an opportunity for those investors still significantly underweight China, for whom China is a major part of their benchmark.
Okay, we've got a technical view as well. This is Lawrence Belanco of CLSA who weighs in. He says that in India, the BSE PSU sector is broken down from the June-September topping pattern as well as the 2023-2024 uptrend channel. He says as long as price action remains capped by resistance provided by the falling 50-day moving average, currently at 21,422, the risk remains to the downside. Relative to the Nifty, he says the BSE PSU index is broken below its 200-day moving average, implying further relative underperformance. At the stock level, he flags the downside risk in Coal India and Power Finance Corporation, that is PFC. All right, well, let's welcome in Ed Yardini, president at Yardini Research, with what he made of things over the last few sessions. Ed, good morning. Great to have you with us here. And thanks for joining us, as always. Should we pay any attention to people like Bostic, etc., last night saying, well, they'd prefer a pause in November? Or you think we should just go with the broad thing that rates are now headed lower? Maybe the first one was the deepest, but we are going to get cuts, over the next many months.
Yeah. Well, I'm kind of biased, quite honestly. I'm predicting none and done. I'm predicting that the Fed is done for the rest of the year, that there will not be a rate cut in November and December. And apparently, from what I understand, that's a fairly contrary position. But I was therefore delighted to hear Bostic realistically state that maybe there won't be a cut in November. Simply put, the economy is doing extremely well. The economy has actually been quite hot. And the risk is that the Fed is heating up, overstimulating an economy that's already doing quite well. And the other area of agreement with this outlook is the bond market. The bond yield has increased from basically 3.6% when the Fed cut by 50 basis points to over 4%. So the bond market too seems to be signaling that maybe the Fed is too far ahead of the easing curve here.
Okay, none and done, at least for this calendar year. Mr. Yardini, morning. So how many next year for calendar year 2025 in terms of rate cuts? And secondly, your expectation from the press briefing tomorrow in China.
Well, look, I think that when it comes to rate cuts, I'm pretty comfortable with the rates are where they are right now. The reason I'm comfortable with that is because the economy seems to be comfortable. It's, as we know, the economy has been growing about 3% at a annual rate over the past few quarters. On a year-over-year basis is up 3%. And that's without any decrease in interest rates whatsoever. So I don't really have a problem with this level of interest rates. But as you pointed out, the Fed does seem to be committed or wants to lower interest rates. They have this idea that there's some sort of neutral interest rate that is lower than where we are today. In their summary of economic projections, they seem to suggest it's 2.9%. There's no way to get an accurate assessment of what the magical neutral rate is, but I would say it's higher than that, maybe 4%.
Hi, Ed. Good morning. Good to see you in. Ed, if you're not going to get any more rate cuts, if you're right and bang on and, what Bostic told us overnight as well comes through, then what about the equity markets? Because the global equity markets are clearly factoring in rate cuts that are coming in there. So how do you expect global equities to react?
Well, remember at the beginning of this year, the markets were expecting 6 to 7 rate cuts. We didn't understand that, and we were talking about maybe 2, maybe at most 3 rate cuts. So far, we've had 1 that was the equivalent of what the market expected would be 2. We had 50 basis points instead of 25 basis points. And the market's at an all-time record high, notwithstanding the fact that, the concern was that the economy might be weak and we would need many more rate cuts. I mean, this is not a bad trade, right? To get better than expected economic growth and sacrifice lower interest rates. The market can live with that. That's better earnings, and valuations are already stretched. I don't think we really need interest rates to come down and push valuation multiples even higher.
No, I mean, Ed, I think you've got it. You've been contrary all year through, and you've been right. I think in this beginning as we came in. I don't think
far, so good.
Absolutely. And as you said, I mean, you are. It's against consensus, not consensus at all. So you're in the non-consensus zone. But you got the bond market which agrees with you. So I think that is what matters.
It does. Yeah.
So we'll see. But thank you very much, Ed. Great to speak with you.
My pleasure.
And appreciate your time
here
on CNBC-TV18. We've got lots of stocks to discuss, which we will get to in just a bit from now. I just want to quickly put out some of the names you'll hear about. Bandhan Bank, Anand, Rathi, Oberoi, Realty, Mazagon, Sansera Engineering and BSE. There are stocks that are on our radar on the back of positive news flow. IREDA, TCS, Tata Elxsi and Ola Electric are stocks that are on our radar and are likely to open in the red on the back of news flow at least. But all of that is coming up with our research team.
Okay, let me also tell you the corporate interactions that are lined up on the show. At 8:35, we have Vishal Manchanda of Systematics Pharma to discuss why pharma stocks were under pressure yesterday. At 9 o'clock, we'll be joined by Manik Taneja of Axis Capital to put the spotlight on TCS's Q2 numbers. At 9:20, Mihir Vora of Trust Mutual Fund will be our market master for the day. At 9:30, we'll invite the management of Birla Corp and Mangesh Bhadang of Centrum Broking to put the focus on the cement sector. And following that, we've got Sumit Gupta of Centrum, who will be chatting with us at 9:40 to discuss his expectations from the pharma sector. We'll do a pharma QSQT. A little later, 9:50, Biju Kasim of Shoppers Stop and Mrigank Gudgutia of Redseer Strategy Consultants will join in to discuss the trends in the beauty care segment. And towards the end of the show, as always, it's our special segment. It's the economy. Lata will be in conversation with Piyush Gupta of CRISIL and Suyash Chaudhary of Bandhan Mutual Fund.
Well, we'll slip into a short break. Come back, we'll get into further detail and all the top stocks that we're tracking for you. Don't go anywhere.
Welcome back. It's a Friday morning. The setup seems to be quiet. Yesterday was also a very quiet session for our markets, but the focus is on individual stocks. So this is CNBC-TV18's list of top stocks for the day. And first up, it's going to be about TCS and the IT pack. Now, TCS reported a margin miss. Margins for the company came in at 24.1%, lower than consensus expectation, and that resulted in a profit miss. So profits also declined by over 1% versus expectation of an expansion. So that's on the margins. On the top line, revenues were in line with expectations. They've grown by more than 2%, but this growth was largely driven by India and the BSNL contract that the company is executing. Look at the India revenues. It's about 8.9% of their overall revenues, and those revenues have doubled on a year-on-year basis, 95% up year-on-year, and a quarter-on-quarter basis is up 21%. If you strip that out, the company's key markets like North America, etc., have been under pressure. The company said in the con call they face client-specific issue in health and life sciences, weak discretionary spending in North America retail, and there were challenges in UK and Europe in the manufacturing sector, which affected the company's revenue growth. The positives, though, in the numbers: one, hiring has picked up, and two, the BFSI recovery is showing traction. So BFSI revenue growth, which was about 0.6% in Q1, has further picked up to 1.9% growth. But still, there is a margin miss, and there is that revenue growth, which is driven only by BSNL. So brokerages are lowering their estimates. JP Morgan cuts margin estimates by 50 basis points. Target price is at 5,100, but they say we will use any sharp correction to add. Nomura lowers EPS estimates by about 2% and Jefferies too is cutting estimates by 1 to 2%. Only bear in mind that Infy has underperformed peers in the last 1 month, having fallen nearly 6%.
Okay, all right, Rima. Thanks for that. Well, let's hop across to Abhishek. He's tracking IREDA. Morning, Abhishek.
Good morning. So IREDA has come out with their Q2 numbers. The disbursements have grown by 44% YOY but declined by more than 16% sequentially. The spreads have come under pressure on a sequential basis. They are down by 11 basis points. However, the net interest margin has expanded to 3.34% versus 3.29% in the previous quarter. With reference to the PNL, the NII growth is 52% YOY and about 7.7% sequentially. They have made a provision this time around of close to 34 crores versus provision write back that you saw in the same quarter last year and even in the previous quarter. So PAT has come in under pressure with respect to sequential growth being at just 1.1% on account of the provisions that they have made. So that's a weaker number coming in from IREDA. Back to you.
Thank you very much for that. Tata Elxsi Q2 reported numbers yesterday post-market hours. It's not an exciting quarter at all, fairly muted, but the company holds on to their FY25 guidance, which means they're penciling in a recovery in the second half. On the top line, it's a revenue growth of 0.2%. The company is doing well in the transportation vertical, courtesy some of its in-house, the Tata Group related auto companies. But the other two verticals, healthcare and media and communication, the company continues to struggle on these two. Margins too disappointed the street. So adjusted margins are down nearly 60 basis points. On a reported basis, you will see a margin expansion, and that's because in the prior quarter, there was a one-off boost to their margins. That said, the company in the conference call yesterday said that they maintain FY25 will be better than FY24, which means they're looking at nearly a double-digit growth because last year they had a 9.6% top-line growth, and they're also looking to maintain their PBT margins in their preferred band of 28 to 29%. But this quarter, not very exciting.
All right, well, let's talk about, thanks for that, Rima, Bandhan Bank, right? They got new leadership, bombed out name completely. Abhishek, what's the street making of it?
Well, positive sign for Bandhan Bank that they have got a new management at the helm. So RBI has approved Mr. Partha Sengupta as the MD and CEO of Bandhan Bank for a period of 3 years. He has to join before 10th of November 2024. Bandhan Bank also received claims raised to National Credit Guarantee Trustee Company under CGFMU, that is Credit Guarantee Fund for Micro Units, and ECLGS, that is Emergency Credit Line Guarantee Scheme. So in total, Bandhan Bank has now received up to 1,460 crores from the dues that they had of about 2,213 crores. So about 65-66% recovery is what they had made. In the first tranche, remember, they had received 100%, that is about 900 odd crores. So in the second tranche, the money that they have received is slightly on the lower side, but it's a good factor that they have received money. Analysts were expecting zero recovery in this account. So in totality, about 66% of the dues have come in for Bandhan Bank. Back to you.
Thank you very much for that. Over to Vamakshi now for Anand, Rathi and Oberoi Realty. Vamakshi.
Well, absolutely, Rima. Anand, Rathi, on our radar, the AUM for the company has come in at 75,100 odd crores. This is an uptick of almost 8.8% that we're seeing sequentially, and with that they've managed to surpass the earlier guidance, and thereby the revised guidance now stands at 80,000 crores. Net inflows were down nearly 31% sequentially. That is a bit of a concern. We'll be waiting for comments that come through from the management on this front. But the revenue is seeing a decent uptick of 2%. Operationally, however, the performance is better, and that is because the PBT margins have improved by around 48 basis points sequentially to 42.1%. The net profit too is seeing an uptick of almost 4% quarter on quarter. So given those developments, going with a green for Anand, Rathi. Overall Realty, on the other hand, also going for a green on this one. Board has approved raising funds up to 6,000 crores. They will be considering various modes, which also includes a QIP route. So given that development, green for Oberoi Realty.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vinny. She's here to tell us about Ola Electric and Mazagon Dock. Vinny?
Good morning. So for Ola Electric, we're expecting a bit of a red again. Now, let's not forget two-wheelers have been giving a lot of higher discounts to attract customers, and seems like Ola has announced that Boss 72-hour rush sale, which will be starting from today till over the weekend. Now, this is additional discounts that they will be giving. They've said that there's a benefit that S1 scooter portfolio around 49,999 rupees. This indicates that, they really need to give higher discounts to attract customers. So yes, from the customer point of view, thumbs up because you're getting it cheaper. But from the company point of view, it will impact their profitability. So we're keeping an eye out on that. Plus, Ola has been a bit subdued in performance and in trade in the last couple of months that we've seen. So keeping an eye out on Ola because we're expecting a bit of a red. Mazagon Dock, we are expecting positive up move coming in for Mazagon Dock. They've received a 121 crore order from Mazagon. That's a Maharashtra state power generation. And this is involving supply installation as well as commissioning of AI-based comprehensive infrastructure projects. So keep an eye out on that.
Thank you very much for that. Sansera Engineering also has some news flow. Abhishek joins in with that. Abhishek.
Well, Sansera Engineering has launched a QIP as per our sources. Now, they will raise about 1,200 crores. The indicative price is about 1,554 rupees per share, which is at a discount of around 2% to yesterday's closing price and about 5% to SEBI floor price. So, the equity dilution would be around 14.3%. The lockup for promoters is about 180 days, and BRLM to the issue includes ICICI Securities and others. Back to you.
Okay, all right, Abhishek, thank you very much for that. The next one is Bombay Stock Exchange, BSE. Vamakshi is here with details. Vamakshi, over to you.
Well, absolutely. BSE expected to open in the green, and that is because starting November 20th, weekly derivative contracts for Bank Nifty, Nifty Midcap and Fin Nifty will be discontinued, and this is to be compliant with SEBI's direction on rationalization of weekly contracts. Nifty 50, therefore, will be the only index that will be available for the weekly expiry contracts. This, of course, bodes, is negative for NSE. That is because Bank Nifty contributes nearly 50% of NSE's option premium volumes, and in fact is NSE's biggest contract. In fact, IFL Securities estimates the net impact of NSE's full year volumes to be around 30 to 35% on account of this development. But NSE's loss could turn out to be BSE's gain. Now keep in mind that BSE's option tariffs are nearly 7% lower as compared to NSE, and given the move to only 2 weekly expiries for both of these exchanges, BSE's market share gains could actually accelerate. So given that development, going with the green for BSE.
Vamakshi, has any I found it quite strange last time when the SEBI regulations came that a lot of brokers wrote notes, but no one talked about this market share business, market share moving. I don't know why, because people that we speak to, like Rajesh Baheti, etc., have been pointing about this quite a bit. We've been and stock reacted right that day. But I've not seen any. And I think Jeffries wrote a note, and there were a few others who wrote, but nobody addressed the market share issue. I don't know if IIFL has done it in the note that you cited.
Yes, absolutely. It's IFL that has actually said that the market share could accelerate for BSE. Given that, now especially for BSE, now there were 2 expiries and now it comes down to just 1. And NSE for 4, it comes down to 1. So for BSE, that may imply some acceleration of market share.
All right, Vamakshi, thank you very much for that. It's interesting because there was some confusion whether exchanges will be allowed to use, whether they had any option I mean, it had to be Nifty or it could be had been Bank Nifty as well. And we had checked at that point. They said, well, both are open. Yeah. But the person I spoke to also said that ideally it should be Nifty. So I said, why?
The flagship.
No, he said,
index.
well, to hedge the Bank Nifty is much more concentrated. So 3 stocks, HDFC Bank, ICICI Bank, Axis Bank, will move things violently around. So it's a more it could. In that sense, it's not desirable. But I don't know if there was a gentle nudge in that sense. Okay. Or they really had a choice in the matter, but the impression that we were given was actually it was a choice and then they've picked up the Nifty in this particular case. But, I think we had Rajesh Baheti at that point, right after those SEBI announcements coming, and we were asking him whether the NSE would choose Nifty or the Bank Nifty. He said, well, if they choose the Nifty, the earnings damage is going to be much more as compared to, what they'd see if they'd chosen the Nifty Bank. All right, well, we'll take a quick commercial break here. When we come back with our market sort of guests, but just to recap the stocks on and just to tell you what we put out, Bandhan, Anand, Rathi, Oberoi, Realty, Mazagon, Sansera Engineering and BSE are names which perhaps start in the green. And on the red side, IREDA, TCS, Tata Elxsi, Ola Electric are some of the names which start in the negative. Manisha is now joining in with a roundup of all what is making news as far as commodities are concerned, and it's got to be oil once again. Manisha, morning.
Morning. Well, absolutely, Prashant. With 3.5% of gains overnight, the Brent crude prices are back above $78 a barrel. And this is going to be a second weekly gain for the crude oil prices. Well, a couple of things. One is the Hurricane Milton, which has struck Florida, and you have 3.4 million houses out of power and 25% gas stations out of gasoline. So there is going to be a rising fuel demand from these areas. The second is the Israel statement suggesting that any response to Iran would be lethal, precise, and surprising. So that also seems to be adding some premium. But apart from that, the metals also have come back quite strongly in the overnight markets. We've seen 1 to 3% of gains come in for aluminum, zinc, and copper. The gold price is also gained up by nearly $40 in the overnight markets. Well, the U.S. inflation did ease, and there is a surge in unemployment claims there. So that also seems to be supportive.
Thank you very much for that. We will slip into a short break. We'll come back and connect with Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock talk.
Welcome back. Well, let's get some fundamental analysis going on all the stocks we just listed out for you. Siddharth Khemka, the head of research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Good to see you. What about TCS's numbers? The stock yesterday came off the highs of the day. The tech index itself was lower. What is your reading of these numbers? And if the stock starts off in the red, will you be a buyer given the recent underperformance?
Yeah, morning, Nigel. Glad to be on the show, and the festive greetings to all of you and the panel as well as all the viewers. So I think if you look at the numbers, the top line was clearly driven by the India business and the sharp ramp up in the BSNL numbers. Bearing that, if you look at North America was down 1.7% on a Q-on-Q basis, which was a surprise. EBITDA margins were 40 basis points below our expectations, and PAT consequently was down 1.2%. So what we see is that growth was primarily driven by the BSNL ramp up, and if you exclude India growth, the overall growth was just 0.7% in USD terms. So that's a kind of a bit disappointing and mainly attributed to client-specific issues in the healthcare and some weakness in the communication verticals. What we have seen is that last quarter we witnessed significant shift in the client behavior, and especially in the US banking sector, the recovery has started taking shape, which is a trend that we expect it to continue. We expect Q3 could be again becoming a weak quarter. Q1, which is your Jan to March quarter, would be a very significant quarter for the tech companies, because that is a time when the budgets for the new year calendar would be decided in the key markets of US, Europe, and that is where I think a good sharp recovery could be seen, because the interest rate cut would have had already taken place, and the budgets for new year, given the newer environment, that could take place. So what we are expecting is that in the near term there could be weakness, and hence any weakness could be taken as an opportunity to buy stocks like TCS, which we believe is a market leader, having a diversified presence, exposure to long duration orders, and its best in class execution give it a market leadership, as well as the market premium that it justifies. So we continue to maintain our positive stance on TCS. We have a buy rating and a target price of 5,400, which is a very decent 28% upside. Nonetheless, as I said, near term there could be weakness, and that would be an opportunity for investors to lock into the stock.
Siddharth, hi, morning. Would you go out and buy Bandhan Bank today? Considering the stock has been an underperformer, this year itself is down 22-23%. Valuations relative to the rest of the pack are fairly okay at 1.1 times forward price to book. And now that key overhang of the MD CEO announcement is out of the way, and the street seems to like the new guy at the top. So would you go out and buy Bandhan Bank today?
Yeah, Rima, good morning. So yes, definitely. I think the news that has come in is very positive. Few days back, the company had also announced the Q2 business updates, which was pretty strong. And I think if you look at the business updates, Bandhan clearly stands out among the MFI companies, where they are still reeling under the asset quality pressure, and Bandhan has clearly come out with strong numbers for the quarter. And with the new CEO being approved by RBI, that definitely removes a key overhang. Currently, we have a neutral rating, given that the overall asset quality is to improve. The business growth is yet to pick up. But I think today, with post the Q2 business update and this key overhang going away, view is definitely turning positive on Bandhan. They have been reporting good quarterly numbers for the last 2 quarters. Even Q1, we saw very strong numbers, and overall our earning estimates with a ROA of 2.2%, ROEs of almost 19%, and a valuation which is comfortable, much below some of its peers. It definitely makes sense to have a positive view on Bandhan.
Right. What about BSE? Good morning, Sid. What's the sense there? I mean, stocks moved up, but from what, 3,800 to 4,200 now. What's the sense?
Yeah, Prashant, good morning. So I think BSE continues to positively surprise us with the expected growth in market share. I was listening to your conversation. So yes, I think market share is something that people have not yet factored in, and it's difficult to say how traders' behavior will move. And hence that there is a reluctance from analysts to give out a number to that market share. But we have seen that with the sensex and bankex, they had gained a significant market share in excess of 20% in the derivatives. Now with just 2 indices, the Nifty and sensex being there, I think the market share for BSE in the derivatives will see a significant up move. Even from here, it could go up to in the range of 35-40%. At least and on a conservative basis, if not higher. And if you look at that, would be a big significant leg up for the overall growth for BSE. Overall, otherwise also you look at the capital market data, things are looking up for BSE across its segments. The latest regulations are also supportive of that. The Star MF platform for BSE continues to report healthy numbers. And as I said, the key driver for BSE would be the derivative segment, where it continues to gain market share. and hence I think the stock should do well.
Okay, all right. Sid, just request you to stay with us. Pharma stocks, they were under pressure yesterday. To discuss what's ailing the pharma stocks, we have Vishal Manchanda, the pharma analyst at Systematics, who joins us on the show. Well, Vishal, good morning and thanks a lot for joining in. Yesterday, I reached out a lot of sell-side analysts and asked them what's going on with pharma. Everyone had a question mark on mind. And then there was this Reuters article that did the rounds that said that, that could be a possible $2, for a generic drug that could come out. That's what, post that US election. And it appears that's what made the street very, very nervous. But feedback late in the evening said that that could not have had such a big impact. So do you think that was a knee-jerk reaction and you think normalcy will resume from today onwards?
Yeah, I think I did go through that news article. So I think this really does not have any impact on the generic manufacturers. My sense is the larger impact will be on either the insurer or the retail channel there. So what's happening is the copay on certain generic drugs is being cut down to $2 per patient. So what the copay is essentially what patients pay as part of the total prescription bill that is generated. So their portion of expenses towards the prescription bill. So that is reduced. It was higher earlier and that is being reduced. So either the insurers will pay a larger amount as reimbursement of the prescription bill or they will cut down the list price. So I think if the list price is cut down, then probably the retailers will have to bear the burden. If I don't think there is a scope for the channel to squeeze in the manufacturers further. So if I look at the generic value chain, almost only 20% of the value is getting captured by the manufacturers and 80% is being captured by the channel. So roughly that number 20-80, it could also be 25-75, but it's more in favor of the supply chain though. They make most of the money on the generic drugs.
Vishal, but did you have a chat with any of the companies? Are they worried or are they also not worried like you?
So I didn't get a chance to speak to the companies on this, but I think I won't believe the stocks. There's going to be an impact here.
So should we brace ourselves for a bit of a bounce back in the pharma names, considering yesterday's news is not material to cause the decline that we had, and pharma has been doing well. In the last 3 months, the Nifty Pharma Index has moved up nearly 15%. What's the view on pharma from here on at a broader level, and then if you could get to the various categories?
Right. So I think a bounce back should be expected because the news is not material, is not going to impact earnings of companies. So Cipla and Lupin were primarily more impacted because there was one drug called albuterol inhaler in that list, which was going to cost $2 or less for the patient as copay. So that hit the two companies more, and we could see a bounce back in those two names today. Overall, I think on the pharma sector, what I think is further run up from where the stocks are today largely depends on how they redeploy the large cash pools that these companies have generated over the last 3-4 years. All of these companies have a very healthy balance sheet. They just need to figure out on what is the best way to kind of put this money to use. So which one does the best in terms of, I think which one does the best in terms of inorganic route play would probably do the best among the pharma names. I think Sun Pharma is best poised in terms of leveraging capabilities for acquisitions.
By the way, Divi's had a massive move day before yesterday. Just your thoughts, Vishal, what's going on there?
So I think a great company, Divi's is a great company. Everything is going right. So what's expected is they're going to grow mid-teens, high teens kind of growth rates. But I think valuations is something we need to really look at. They seem to be very expensive. So that's a call I think investors would rather take on valuations. It's a matter of how do they look at things relatively is also important. But I think valuations, I find them very steep on Divi's.
market cap of Divi's Laboratory has now crossed 1.5 lakh crore. And I think it's become the second, largest in terms of market cap in the pharmaceutical space in India. So big move.
Almost trading at 20 times revenue.
Go ahead.
20 times revenue.
20 times revenue.
Yeah.
And in terms of PE?
So I think forward should be around 60, 70 times sort of those numbers.
And what would the 3-year or 5-year average be in terms of valuations?
I think the long-term average is around 30. The long-term average is around 30.
The stock's not returned anything. Actually, that's not correct. I mean, the stock was $4,000 in 2020. Okay. It's at 5,900, so 20% in 4 years, which is in the kind of market we've been. But yeah, you've got to look at valuations, as Vishal is saying. Lots of fans.
In fact, in the last 6 months, it's done quite well. And some of these stocks, when they're part of the Nifty and they're going to move out, then you see that kind of selling that comes in. Yeah. And then, in fact, it recovers post that. So that's a technical factor as well at play.
Okay, all right, Vishal, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC-TV18. We'll take a break. We're back. Some technical ideas coming your way. Mitesh and Sudarshan will be with us this morning. Okay, welcome back. We got Siddharth Khemka, of course, still with us, and we'll have the technical experts also joining us in just a bit from now. But maybe just sort of address a few other things before we move forward. I think we discussed BSE, we discussed, of course, Divi's with a pharma analyst. Bandhan Bank was another one. I just wanted your thoughts on 2 or 3 names, Sid, if you have coverage, if you look at it closely. Yesterday, you had these shipbuilders, Mazagon, Garden Reach, going up 8-10%. They'd come off their recent highs by 30-40. So that is one. Then the Tata Group companies, Tata Investment Corporation went up sharply. It's like a amalgamation of basically holding. It's like a, for the lack of a better analogy, like a mutual fund, but of course differently structured, with Tata Sons owning about 73% in the company. And Tata Chemicals went up sharply as well. So yeah, I mean, 4 names your way. Go on.
Yeah, Prashant. So I think within the PSU defense names, it's more of a recovery trade that is happening after the sharp correction in some of these names over the past couple of weeks, about 30-40% correction. There seems to be some interest coming back, and some of these players have been consistently winning new orders. Now, the only challenge with these names like Mazagon or GRSE is the valuation, which continues to remain at a very premium level. And it's just that market interest after the correction. So while the long-term structural story for the India defense continues, I think in the near term, these stocks would oscillate or could remain volatile based on how investors treat them. So at this juncture, I think a lot of these PSU names, including the railways, the defense, and a lot of other public sector enterprises after the correction definitely looks attractive, and hence that buying interest coming up. Tata Group, I think the market paid a homage to Mr. Ratan Tata's departure, and stocks definitely yesterday, a lot of Tata Group stocks did well, and the resultant improvement in Tata holding company. Tata Chemicals, I think the news flows of some of these companies putting up a request with the government for anti-dumping in the soda ash, which the government has taken up. So that news has driven stocks in the soda ash space, especially if you look at Tata Chemicals. So I think overall, PSUs looks good after the correction, but nonetheless, it could remain a volatile journey from here. Tata Group continues to remain the bellwether in the Indian markets, consistently creating wealth across sectors. And we have been positive in a lot of Tata names. TCS came out with results yesterday, a bit miss, but I would still say that market leader in its space, the best in class execution, and we would be buyers at any dip.
Okay, all right. Before we let you go, Sid, wanted to ask you about IREDA. That's the other name that came out with its set of numbers. The stock was more than 300 rupees. It's seen a bit of a correction. How do you read the numbers? And at 230 rupees, what's your view?
So we don't have coverage on IREDA, unfortunately, but results were very strong, and I think the approval from the insurance regulator for IREDA to get into the B2C segment as well, that would be a key driver for the stock in the near term.
All right, we'll take a quick commercial break here. Sid, stay with us. We're going to come back and we'll get those technical ideas for you on the other side. Stay with us.
Welcome back. We're going to get the pre-open rates in just a bit and the market opening in the next 15 minutes or so. But how do you position yourself? The last couple of sessions, the bulls have been given hope only to get sold into. So at around this 25,000 mark, what's the call? Mitesh Thakkar joins us to help us out with exactly that. Hi, Mitesh. Good morning. Good to see you win. It's Friday. What's the trade on the Nifty? At around this 25,000 odd mark, it appears, at higher levels, we're seeing some bit of supply. But your take.
Yeah. Morning, Najib. No, I've been suggesting that this market texture in the short term has changed from buy on declines to sell on rallies. And I think you are seeing a lot of supply emerge whenever the market tries an intraday move or rebound on the upside. So I think that's going to be the kind of phase. The good thing is that we made a low of around 750 on the 9th of September, and we are broadly, hanging on to those levels. We bounced back from those levels, so that should not be broken. If a few days of volatility can be absorbed and the market manages to stay above the support, then I think we might look at a reversal on the upside. But for the timing, I think I would be a seller on rallies close to about 25, 200, 250 zone, and then if we get to 25, 350, I think even an aggressive seller. Only about 25, 400 would have turned my view on the positive side. Or, if we can do some base building here and then reverse. So the market is slightly on the weaker side, but yeah, you can keep getting those intraday bounces.
Okay, you'll get confident once we get past the 25,400 mark. We noted that, Mitesh. Mitesh, what about the Nifty Bank? That move yesterday was quite heartening. Took out, I think, the 50 DMA as well as the 100 DMA. But is this the real deal?
I still don't believe so. So I think, again, the Nifty Bank also made the low around the same 9th of September's low, which is around 50,500 on the bar basis. And it needs to get past, 52,500 to show some kind of trend reversal on the upside. And I think we are still far away from there, about 1,000 points away. So again, the Nifty Bank was equally oversold, and therefore you're getting these bounces, but not sure of the market turning on the positive side yet.
Okay, in pre-open, TCS is down nearly 3%. HCL Infosys also down in sympathy with a cut of about 1 to 2%. Mitesh, what would your stock calls be for this morning? And any thoughts on IT large caps?
Yeah. So I'll start with the IT large cap. It was doing very well, and we were seeing good outperformance in the IT large cap stocks. But what has happened is that it's kind of reversed from the lot of these stocks have reversed from the earlier highs. For example, Infosys made a high of around 1965 closing on the 2nd of September, and we got a closing of 1962 on the 9th of October, and we've kind of seen the markets reverse from that. So I think the strength on the upside is gone. We don't have a sign of a big downside reversal as yet. So I think they might just, go into sideways consolidation with mild pressure on the higher side or around the previous tops. Coming to my stock calls, I have a mix of buys and sells. I have a buy on Maruti, which I would recommend buying with a stop just below levels of 12,750 for targets of 13,500. ITC has been a sell call for the last few days. So again, now can be taken a fresh shot. Now fresh shots can be taken with a stop at 498.5 for targets of 480. Kotak Bank is a buy on mild declines. If you get it around 1865, buy with a stop at 1844 for targets of 1910.15, and L&T is a sell with a stop about 3500 for targets of 3385.
Let's invite, thank you, Mitesh, for that. Let's also invite Sneha Seth, derivatives research analyst at Angel One. She joins us on the show. Sneha, morning. Happy Friday to you. First, if you could tell us the setup and then the calls.
Very good morning. If you look at market broadly, it is in a range wherein 24,700, 800 is acting as a support. On the higher side, any sustainable move above 24, 25, 200, 300 would be interesting. So at this point in time, this is the range. Unless and until we don't see a directional move, decisive move beyond this range, we would avoid any directional bets and index. Individual counters, we have a mixed trade. The first one is on M&M, wherein this counter has shown decent outperformance, continuously trading above 20 DEMA on the daily chart and trading near the all-time high. So I believe looking at the overall chart structure and options activity, we expect this counter to head at least towards 3,320 levels. So for the target of 3,320, it's a buy. Stop loss can be maintained around 3,107. Apart from this, we have a sell call on Federal Bank. This counter has been in a pressure and now it's trading around the 89 EMA. Looking at the overall positions in the future segment, I believe we may see further correction in this counter. For the target of 179, it's a sell, and the target and the stop loss can be maintained around 189.
Thank you for that. Let's talk about TCS and Tata Elxsi. Now, TCS was a miss. The company missed street expectation on the margin front. The top line growth was driven largely by the India BSNL revenues. If you strip that out, in fact, BSNL contributed 72% of the incremental revenues. But the other key markets, like North America, for instance, was down 3.5% on a quarter-on-quarter basis. So it's caused some disappointment, amongst market participants. Many analysts have gone ahead and lowered EPS estimates by about, 1 to 2%. Also, the thing is that Q3 is unlikely to be any different compared to Q2 because one, the BSNL contribution will stay in Q3 and two, Q3 has furloughs. So Q2 has been subdued and Q3 is also likely to remain subdued on account of these two factors. The question is the recovery from here on, Q4, once the BSNL contract, contribution wears off and BFSI, etc. in North America starts showing more traction. We're already seeing green shoots in BFSI. BFSI revenues went up by 1.9%. The fact that the company hired employees for the second straight quarter is also fairly encouraging. Manik Taneja, Executive Director, IT Services and Internet at Axis Capital, is with us on this show. Manik, thank you very much for joining in. First, wanting to ask you that, the street is a bit disappointed with TCS's numbers, but most brokerages are bullish. But you have a sell call on TCS. So first, why the sell? And then we'll get to the Q2 numbers.
Good morning, Rima. So we've had a negative stance across most of the tier 1 IT services pack, and the sector excitement through the course of calendar 24 has basically been hinged on macro recovery, and the rate of change excitement continues to disappoint people. So if you recall, in January, February also, people were very excited about an improvement. Some of the expectations got dashed with the way companies guided in April. And with the way things have been progressing, I think the direction of improvement continues to disappoint the street, and that's where we have a negative view across most of the names.
Okay, so you're not convinced about the recovery. The recovery is likely to fade. We've had these promising starts in the past, but they haven't sustained. So now let's talk about TCS. What were the key highlights for you, and what is the takeaway for the rest of the large cap pack as it reports numbers next week?
So I think you summarized it quite well when you said that bulk of the incremental revenues have been supported by India/the BSNL deal, and which is where you've seen margins also come off on a sequential basis, which is contrary to the usual trend that you witness in September. And this is the first time since Q2 of FY20 wherein margins in the second quarter are lower than first quarter. Going into next year, while there is certainly hope about BFSI recovering, there is also hope around, given the kind of data points that keep on emerging from the US, that retail industry segment should also pick up. But TCS in particular has to also contend with the drag from BSNL going into next year. So thereby, with the way street expectations are possibly of about between 8 to 9% growth for TCS in FY26, I think those estimates need to possibly come down to closer to about 6 to 7%, and that's where those estimates should settle. Finally, I would just remark that Indian IT companies continue to see this round of excitement build into the stock prices, if you look at any of these names, they are up between 15 to 25% on a calendar year 24 year-to-date basis. But none of the global IT services stocks are reflecting any excitement about macro pickup. So that's how I would leave it.
Just to get the numbers right, next year consensus is expecting 8 to 9% top line growth. You think it should be closer to 6 to 7%. What about on margins? Because if this BSNL contract is hurting margins, will it not impact next year's margins? And what is consensus EBIT margin expectation from next year, your own, and therefore EPS numbers too?
Sure. So from a margin standpoint, I'll just step back and first of all talk about the fact that TCS did extremely well on margins in FY24, and that was supported by significant rationalization on subcontracting. And some of these costs actually are reversing in FY25. And given the headwinds from the BSNL contribution, margins in FY25 are now going to be flat on a year-on-year basis at best. Certainly, with the way BSNL contribution will reduce next year, margin expectation going into FY25 should be expecting there should be some improvement built into the estimates, and which is what Street and us are already factoring in. This extent could be anywhere between about 50 to 70 bips, depending on different market participants.
Tata Elxsi, Manik?
Yeah.
Is Tata Elxsi a stock that you track?
Yes, we've had a sell on that stock for the longest amount of time. And if you see, this company has been struggling outside of the transportation segment for the last couple of years. And with the news flow that one is picking up from global auto OEMs, I will not be surprised that you see some moderation in growth in the transportation vertical in FY25. And even within the transportation segment, this company's fortunes are significantly dependent on group companies, which is JLR in their case. And thereby, I am not too excited with the multiples that this company enjoys, and we've had a sell rating for the longest amount of time.
And what about Infosys? Is the street's optimism going into Infosys earnings also going to be unfounded by the end? Because the stock since early June, has rallied about 35%. And numbers are expected to be pretty robust in Q2.
Sure. So I would say Infosys's valuation discount to TCS has narrowed significantly compared to historical averages. I think for that valuations sustained at current levels, Infosys should not be disappointing either on second quarter numbers or the upgrade in guidance that the street believes Infosys should be doing. The arithmetic certainly is in their favor, but we'll see as to how things play out, because in the past also, there have been occasions when, despite very modest arithmetic, Infosys has desisted from increasing the outlook after second quarter numbers. But I would say an inline to a better performance in second quarter, as well as an upgrade in guidance, will be required for the excitement in Infosys to sustain.
Okay, Manik, appreciate you joining in, giving us your take, sounding more or less cautious on the tech space, as you've been for the recent past. Thanks a lot for joining in and giving us your take. Let's get Mitesh back in for our 9:10 call. Mitesh, go for it.
Yeah, for the 9:10 call, Nigel, I would suggest a sell on ITC for targets of around 480.
Okay, thanks a lot for that, Mitesh. Well, let's talk about one of the biggest movers in pre-open. That's Bandhan Bank. It's up close to around 8%. Couple of factors going for them. One is on the recovery side and the other is on the new appointment. Abhishek joins us to fill us in with all of those details. Abhishek, take it away.
Well, Nigel, to begin with, Bandhan Bank has got RBI's approval of Mr. Partha Sengupta as the MD and CEO of the bank for a period of 3 years, and he has to join before 10th of November 2024. Bandhan Bank has also received claims that they have raised to National Credit Guarantee Trustee Company under CGFMU and CLGS. So, in totality, Bandhan Bank has received about 1,460 crores, while the claim was about 2,000 3,213 crores, so about 66% of the recovery that they have got. So CLSA has written on Bandhan Bank, they have an outperformance rating with a target price of 240 per share. They say that key overhangs are gone. With these two key overhangs now behind, the focus will turn on to fundamentals for the investors. While near term they expect pain in the MFI sector, however, they believe that this is already in the estimates for Bandhan Bank and in the stock price as well. Jefferies has written on Bandhan Bank buy with a target price of 240 per share. They say that RBI has appointed new MD and CEO for a period of 3 years. This is positive as he was earlier the Deputy MD and Chief Credit Officer at SBI and then MD and CEO at IOB, that is Indian Overseas Bank as well. And he has also worked in West Bengal, which is a key area for Bandhan Bank business as well. With past stresses getting cleared and valuations being very attractive, they remain buyer on the stock. Back to you.
All right, Abhishek, thanks very much for that. So that's basically Bandhan, which is up about 7.5 odd percent. You know, I think it's one of the few stocks, large stocks, well-tracked names, which is still around about near its COVID lows. I think the COVID low was about 150. Stock's at 200. So that's quite incredible. So there's a big lift coming through on that one. Let's look at BSE as well, which is the other one, and maybe look at TCS as well. So these are all sort of news-related reactions. BSE is starting about 1.25% higher. That's $50, and TCS will also come up on your screen. That's, I think, about 2% lower in the pre-open session. So first trades coming up. We'll do indices and get into stocks. It's a slightly lower start, but flat actually for all practical purposes. 24,984. Now flipping into the green, red again. So flattish. Bank Nifty is down about 0.15. So 51,462. That index had about 1% by close on it yesterday. Sensex is absolutely flat. 81,550 is where the Sensex is at. Mid cap index is actually quiet, almost unchanged. You know, you'd almost miss that the market's open. It's that flat in some cases. We'll have the Nifty heat map coming up on your on our screens as well in just a bit. But yeah, there you go. So it's more down than up. I think almost about 38, 40 names are down. About 35 maybe, but the rest are higher. But more down than up. That's essentially the Nifty heat map. 36 lower now in the Nifty, 24,961.
Well, Cipla is the top Nifty loser, so that's down 2.5%, so extending the fall from yesterday. TCS opens in the red. It's a minor cut of about 0.6% post the Q2 numbers and the margin miss. Remember, JP Morgan and most brokerages are bullish because they're still talking about a recovery which will take place in FY26. So TCS is opening now down close to about 1% and plus TCS had already fallen 5-6% in the last 1 month. The losers are in the banking pack. You've got an ICICI Bank and an Axis Bank. So these are stocks under pressure. Adani Enterprises is also, I think, slightly lower in today's trading session. There was that, QIP, very strong kind of a demand coming through. Adani Enterprises is down nearly about 0.7%. But the other IT names are bouncing back. So HCL Tech, Wipro, Infosys. So it appears the street is differentiating between TCS, saying the issues were company-specific because the company did talk about client-specific issues in UK manufacturing, North America retail, and life sciences and healthcare. And it's not an industry-wide problem. HCL Tech is now the top Nifty gainer. Wipro is up nearly 0.5%. Infosys opens up in the green. Other gainers include that in the metals pack. I think as an index per se, it's the Nifty Metal Index where you are seeing a little bit of green. Hindalco, JSW Steel, higher in trade. Bajaj Auto is looking quite smart. But on the whole, very, very, quiet. Outside the index, I think it's Bandhan Bank, right?
Well, that's right, Rima. And the metal index is expecting something from the Chinese authorities tomorrow. They started the week with some hope, then they got a little bit disappointed, and now they're back up. Maybe over the weekend, the Chinese authorities can fire a bit of a bazooka. That's the hope looking at the screen. What about stocks moving around? Sterling and Wilson, that stock's up close to around 3%. So good move is what we're seeing on that one for starters. IREDA, in reaction to its numbers, the stock was up close to around 2.5%. So an uptick is what you've seen on that counter as well. Sterling and Wilson is the one that we're talking about. Yes, 3% up. IREDA, let's pull that one up as well. ABFRL has valuation comfort as being a bit of an underperformer. They seem to be getting their act together though. And that's why I think that stock is up close to around 1% or thereabouts, one of the top volume movers. TRIL, that's Transformers and Rectifiers, came out with its set of numbers, stock up close to around 5%. I think it's in that 5% circuit band. Vocart as well, that as well is up in that circuit band, up close to around 5%. What's not doing well then? Cummins, that stock is down close to around 3.5%. I don't know what's gone on there, but that stock is seeing some selling. Credit Axis Grameen as well. Yesterday, the operational update came in. It wasn't looking too good, and that stock as well is down close to around 2%. So it was down close to around 2%. Today, it's down another 2.5%. Couple of big movers in trade for this week itself. Dhani Services, the stock has seen a big run of more than 20% in this week. Not sure what's the news flow. Big volumes out there as well. For the time being, the stock is down. So Dhani Services is a stock we're talking about. And Jyoti Structures, another big mover this week. That one as well is cooling off a little bit. So both these two are up 25 to 30% in a single week. Both of them have come in for some profit taking. In fact, Jyoti Structures has turned around now in the green.
Absolutely. Was a mover yesterday as well. 50 points lower in the Nifty, 24,944. Nifty Bank is down about 1/3%, 51,350 is where we are at. The IT services index is up about 1/3% for now. So that's the sort of, TCS. I think there was, of course, there was an 80-odd basis point margin miss. And that is down about 1%. It's come off the day's low. Look at Infosys as well, if you can, quickly, because that's the other one we should watch out for. It's about 1/3% higher, 1925.
The street is taking heart from the fact that US BFS is actually recovering. So banking and financial services approximately is 30 to 35% of the industry revenues. For TCS, it grew by 0.6% in Q1, and this quarter it grew by 1.9%. And the management commentary was also that the recovery continues. So I think it's, there is a lot of heart, which is comfort, which is being drawn from the banking and financial services performance for TCS. So names like Mphasis have opened up well because they get a majority of their revenues from that sector.
But it's someone said slim pickings, right, in the sector. In that, I mean, there's a fresh opportunities on the back of where the numbers, etc., are coming through.
And the screen actually is telling you a picture, right? Because as Jim has been saying, valuation-wise, they're trading at a premium in comparison to its multiples. They've already seen a big run. TCS's numbers, well, they're not very inspiring, but the street is choosing to take the positives. Gives you the kind of, positioning that we're seeing in this one. All the tech stocks are already in the green, and TCS is on the verge as well of breaking into the green. So it tells you about, the market psyche, so to call it, and the approach to the tech space. They believe FY26 onwards, things will be much better.
Absolutely. So we'll see whether that holds. But Mihir Vora is with us now, Chief Investment Officer at a Trust Mutual Fund. He's with us in our studios. Mihir, good to have you with us here, as always. Thanks very much for your time.
Always a pleasure.
There's a new fund offering which Trust is coming up. We'll talk about that. It's on the small cap side. But since we have you, just thoughts on markets, Mihir. Is this just a bit of a pause that we're seeing as far as large caps are concerned in India? And generally, the outlook looks pretty positive. US is making new highs. Incrementally, if anything, there is positivity in China, which is used to be the other big growth driver. So global is holding up better than usual. What's your sense?
Absolutely. The domestic situation is fine. We're talking about 6.5 to 7.2%. RBI says 7.2. Consensus is 6.5 to 7% GDP growth. So that's I think holding up. The US domestic economy also has been quite resilient, so to say. But in general, if you see the pressures in the last few weeks have been on the debate in the West, between inflation and growth. And inflation has been creeping up from time to time. So you see these bouts where there is some fear of tightening. But my broad picture, or big picture, is that they have no choice but to keep interest rates low and keep printing away. Because the way the refinancing is coming up in the next 2.5 years for the US debt maturities, they have no chance of refinancing it if they don't keep liquidity easy and interest rates low. So I think structurally, we will see higher inflation because of printing, but that will lead to higher asset prices. That's the big call.
So it's a positive environment. It's a risk-on environment.
It's a risky risk-on environment, so to say, because you are actually depending, and it's going to happen on a lot of money printing happening. It's a bad time to be poor because inflation hits the poor the most, and that's the situation globally. But that's the way things are. So assets will go up, whether it's stocks or real estate or gold, because of money printing.
Okay, risky, risk-on environment for the globe. What about India per se? And it's a tough time to be poor, right? Inflation hurts. So what about consumer durable names? Talk about the sector outlook from here.
See, India is different, right? For us, the situation is very different. Our demographics are far different from the rest of the world, even from compared to China, etc. So I don't think for us a 5% inflation is something new. We are used to it, and there is a difference between a 4% inflation with a 2% GDP growth, which is probably the case in the US, and 0% in Europe, and 7% GDP growth and 5% inflation. You can absorb that, because income levels keep rising, etc. So for India, things are different. We are not going to see downgrades in GDP growth.
Okay, and what's the overall call for Indian equities from here on over the next 3 to 6 months? Because earnings hasn't been very exciting.
I think it's going to be a stock pickers market. The global backdrop, as I told you, is going to be easy liquidity. So I don't think there's a risk of that. So FII flows as well as domestic flows should continue to hold up the market. The results season will be, sector specific, stock specific. I don't think people are expecting big numbers from the large caps in terms of, probably we are talking about single digit earnings growth. But in the bigger universe, there are lots of exciting stock picks. So India, I think, is becoming a broader market than what it was before. So to that extent, the sentiment should continue to hold tight.
Well, the sentiment is telling you it, right? Mihir, we had $5 billion of selling from the FIs in 5 sessions. We're talking about earnings growth for this quarter of 2 to 3%, and then a pickup in the second half of the year. And the market refuses to correct 5-6% as well. That's telling you the kind of money that's waiting in the sidelines domestically. But you tell us, y'all are looking to tap the small cap space. You'll have an NFO that's opening up. One would, people argue small caps are expensive. We say that Nifty is trading at X and small cap is trading at 25-30% premium. But you're still coming out with an NFO. Tell us how you're positioning this and few more details.
Absolutely. So part of the answer is in your question itself. When you said the earnings are likely to be, say, single digit, that's probably for the large companies at an aggregate level.
Yes.
But if I just do a cutoff of 2,000 crores, there are 1,100 companies of a market cap of more than 2,000 crores. The market's very wide now.
Yes.
India is a stock picker's paradise, I would say. So even if you remove the top 250, which is large and mid, 100 large, 150 mid, there are still 850 companies to choose from with a market cap of more than 2,000. And of course, we can go below 2,000 also. So when you are saying expensive, small caps are expensive, I don't think it means that 1,000 companies are expensive. Probably
a part of the market.
A part of the market is expensive, frothy, and probably the extremely micro caps, SME segment. But if you look at the structural change in the market, 10 years, 15 years ago, the top 100 companies used to comprise of about 80% of the market cap. Today, it's about 60%, right? So it's no longer a concentrated market as it was before. It's broadened a lot. 4 years ago, there were 200 small caps or 220 small caps with a market cap of more than 2,000 crores, the way I use the cutoff. Today, there are more than 800 such stocks, right? The largest small cap used to be about 7,000 crores. Today, it's about 30,000 crores. The 251st stock, as we say, it's about around 30,000 crores. So, number of stocks wise, size of the small cap universe, you talk about market, broadly speaking, we are about 450 lakh crores market cap, right? 90 lakh crore out of that, so more than $1 trillion is small caps. And another 90 lakh is approximately, I'm just rounding off the numbers, mid caps. Right? When we talk about that 40% being mid and small, it's 90 lakh crores each. The size of the universe itself is quite large. So when we are talking about the small cap space, it's a wide canvas.
It's a stock pickers, this thing. But as Nigel was asking, the question is about timing. There are periods when, for example, 2018, right? I mean, we only found out in hindsight that it just topped out. Markets didn't go anywhere. And,
absolutely.
I don't know why, but it happened. It happened. Maybe excesses or whatever. You think you don't think there's a timing issue here at all, or you think it's okay?
My comfort comes from the fact that the markets have not been completely irrational. So, for example, we still like chemical sector, right? But if you see chemical stocks, they have corrected quite a lot in the last 1.5 years. I'm not talking about just 2 months. I'm talking about 1.5 years of corrections in chemical stocks, 1.5 years of correction in banking stocks. A lot of correction in defense has happened in the last couple of months. So it's not like everything is trading at all-time highs, right? And if we still believe in the structural stories in some of these segments, then valuations can make sense. So as I said, the canvas is so large. We are talking about 800 stocks, 1,000 stocks, that there will be stock picks available, which we are confident of. And the good thing about small caps is that it fits in perfectly with our investment philosophy of terminal value investing. Because all the things that we talked about, remember during the NFO time, the previous NFOs, about physical asset creation, about financialization of savings, about premium consumption, etc. A lot of these themes, frankly, are available only in small caps. So if you want to participate in so many of these high growth themes in India, you have no choice. 90% of the choice, 80% of the choices in terms of number of stocks are in small caps only. For example, if you want to buy a hotel stock, it's doing so well, right? The sector is doing so well. There's no large cap. Well, you get at least 10, 20 options in mid cap. Consumer durables you talked about, right? There is no large cap consumer durable. The only options are mid and small cap. So exposure to high growth sectors can only be, there in some cases through or predominantly through small cap.
And also there are so many niche sectors, industries which feed into bigger industries where the exposure you can only get through some of those.
The other thing that has changed structurally is that earlier, mostly small caps were ancillaries to large caps. Now small caps have their own segments. For example, wealth managers. I don't need an ancillary to anything, right? Asset AMCs or broking companies, they're not ancillary to any large cap. They are standalone segments in themselves. So all these themes can be accessed only to mid or small caps.
Should we assume these are sectors you like?
Absolutely. we have laid it out in our presentation.
So tell us the sectors that you like, right? List them out, the top 5 sectors that you like right now.
We talked about the broad themes. So first is premium consumption. So in all segments of consumption, the premium segments are doing very well. So whether it's in real estate, whether it's in consumer durables, whether it's in, for example, gems and jewelry, those kind of segments will cars, two-wheelers, in all those cases, the higher end consumption is growing at a faster rate. The size may be small, but the growth rates are higher in that. Financialization savings, right? So we are talking about all the non-lenders. Lenders are usual stuff, but non-lenders are where the higher growth rates are. For example, when you talk about insurance, asset management, wealth management, broking, capital markets, the depositories, etc. So those segments will grow faster. Physical asset creation, we all talked about manufacturing, real estate, construction, infrastructure, those segments. So those are the themes which we believe will drive the economy if we are to grow at 7% or more than 7%. And of course, our favorite segment, which is the new age companies using new business models.
Okay, all right. Quick word on cement before we let you go, because that's the sector that does well in the second half of the year, and the first half has been a washout. Whether you talk about elections, you talk about the monsoon, seasonally weak, but the first half has been a washout. So just leading into the next discussion, your view on the cement stocks?
See, I'm a real, what do you say, structural bear on commodities, because our investment philosophy is long-term growth and visibility of growth, and commodities like cement, etc., are too cyclical in nature. While there may be supply, demand, and seasonal opportunities available, structurally, they are commodities, and beyond a point, wealth creation it can happen only, through some barriers, entry barriers, etc. So, in my view, cement is more of a trading segment, and we don't consider it as a long-term structural play.
Okay, all right, got that made. And I think with regard to this commodity segment, you rather play segments like, I think pipes or something like that is what you'll have been bullish on in the past. So you don't play the commodity, but maybe where it gets used and where there is an end use of it, like I think the water theme and various other oil and gas themes. Thanks a lot, Mir, for joining in.
Always
and
a pleasure.
All the best for the NFO. We look forward to chatting up with you post the closure as well.
Thank you so much.
Okay, all right. Well, since we just got a take on cement, let's turn the spotlight on the cement space. The first half of the year has been a washout. However, the hope is the second half of the year will be good. So we'll, in a short while from now, we'll have Mr. Sandeep, the MD and CEO of Birla Corp, who joins us, as well as Mangesh Badang, the Senior Vice President at Centrum, who joins us. Mangesh, let's come across to you first. Tell us what kind of recovery are you anticipating and what are the initial feelers? You know, from September onwards, we've been hearing about this price increases. Has it happened? Has it got absorbed? If yes, quantum, and where did it get absorbed? Which geography?
Hi, good morning, Nigel, and thanks for having me. So yes, there have been some price hikes in the region. So for the past couple of months, we have seen marginal upticks. But I have to say that, the attempts are there from the companies to increase the pricing. And we might see even in the month of October, there would be at least a couple of rounds of increases. Till now, on an all India or the pan India average basis, I think 10 to 15 rupees kind of a price hike has already been absorbed. And we have seen announcements in the month of October of similar quantum of say 15 to 20 rupees per bag. We'll have to wait and see for some time whether these gets absorbed or no. But at least in terms of growth, there have been signs that pricing has actually improved. If you ask me about the regions, I think East is the region which has at least till now seen highest increase, but that is also because that region had seen a substantial drop. The prices had reached a level of almost 4 to 5 years low, and from there has been some increase. And that should be followed by South and then West. In terms of pricing, till now, I think Central is the region which still remains a bit weaker, but I think it will also catch up. For demand, I think is expected in the second half. It has still early days, to be honest, but at least, we feel that post this festive season, I think that should start substantial.
Okay, all right. Got that, Mangesh. So at least there is a hope. I think, what the companies are trying to do, and this is the feedback that I've broadly got, is try to push a price increase, but also you're assuring yourself that at least you're forming a base for pricing. As you said, in certain regions, it's 3 to 4 year lows. So may not get the entire price increase, but you're creating a base, which will be good news. Let's talk about a couple of other aspects then. Demand as well has been weak. And I think in your note, you're noting that, in the last quarter, we could possibly have a degrowth as well. For the year, what kind of industry demand growth you're factoring in? And is there a downside risk to that?
Yeah, so we, in fact, were on the lower side while assuming FY25 demand growth. So we are at around 5%. And I think the industry will have to grow at around 10 to 11% to reach those levels, which is basically possible. But I think 4 to 5% is the range that I would see for FY25 now. But definitely, second half would be much better because we've had good monsoons. And we have started hearing that at least, the government spending should start and, the money has reached the panchayat levels and, on the groundwork should really start on various infra activities, which should be good for the overall cement demand.
Okay, so got that. Now for EBITDA per ton, because of weak pricing, weak demand, you're saying that, the ballpark number for the industry, I think you're working with is around 700 rupees. Now, given that pricing will improve, volumes will improve as well, this EBITDA per ton from round about the 700 rupees, what does it improve to in the second half of the year for the industry at large?
Yeah, so for second quarter, we are estimating close to 700 rupees EBITDA per ton. And what we feel is that if you extrapolate the current prices to most of the cement companies' earnings, I think they are at around 950 right now. So I think, that 4-figure mark that is above 1,000 can be reached in third quarter itself with relatively better pricing and good demand as well.
Okay, got that. So, we are already likely to be at around 950, and for the third quarter on an average, it could be around 1,000 rupees. So that'll be good, right, Mangesh? From 700 odd, it improves to around 1,000 rupees. Let's talk about some inorganic growth, Mangesh. And we have been in touch, I think, for 10, 12 years odd. We have heard so many rumors about this asset getting sold, that one getting bought out as well. The problem is in the last 2 years, actually, many of these assets and many of these deals have actually taken place. Now we are hearing about Heidelberg Cement. But I think most of those reports are indicating a valuation of 10,000 crores odd. I think they're also including the Zuari asset. So according to your estimates, what should this asset ideally be priced at? It's got a good, a good exposure in the central part of the country. But what kind of an EV per ton would you think this asset gets sold at, if at all it does get sold?
So if I have to do reverse calculation at 10,000 crores, if I include both the assets, that is Zuari as well as Heidelberg,
the value comes to around 82.5 dollars EV per ton. And I think it's a fair value for the assets given the size as well as, so somewhere between 80 to 90 is the one wherein the companies, if you purchase at this price, they can generate 12 to 13% kind of ROCs. At current prices, in fact, ROCs could be lower, but assuming that some efficiencies get built in, some pricing premium gets captured, some synergies get developed, and then your return ratios improve. So I think that is the range one should be looking at. Anything higher than that, then probably the acquirer has paid probably higher. Anything lower than that, then you can assume that basically that company has not got fair value for the same.
Okay, and just to help our viewers with the capacity. The total capacity of the group is how much in India? Heidelberg as well as...
in my opinion, it is 14.5, wherein close to 7 million tons is in Heidelberg and 7.5 is in Zuari.
Profitability of Zuari has been lagging Heidelberg?
Zuari is higher than Heidelberg.
Got it. All right. And who would be best placed, Mangesh, to pick up this asset? It's a decent asset, I believe, in the central part of the country. Who do you think will be gunning for it? Will it be a strategic fit for...
Yeah, all the large companies should ideally vie for the assets. Where it will go is very difficult. It's your guess is as good as mine. But very difficult to pinpoint one. But as I said, the larger ones are the ones who are in the forefront, who have been the consolidators in the industry. I think those are the ones who would be vying for the same.
Okay, all right. Tell us which are the companies now that you're positive on. You've given us a good idea about how things should shape up. Pricing will improve, demand will improve, 5% on an average growth for the industry. EBITDA per ton improves as well to around 1,000 rupees per ton. Your top buys, top two top buys and your top sells.
So I think one should go for the consolidators right now because, we feel that another 20 to 30 million tons of capacity at the minimum is up for grabs. And the larger ones are in best shape in terms of their balance sheet as well as size to capture and the kind of synergies they can drive from those acquisitions. So I would still go with Ultratech and Ambuja as top picks in large caps. And within the smaller ones, I think, JK Lakshmi is the one which is looking relatively well placed right now. I would, in terms of basically, I would not be net short or net sell on any of the cement. But I can say I can neutral on, say, the likes of Ramco, Shree, and the rest, Sagar and others.
Okay. All right, Mangesh, appreciate you joining in and filling us in with your analysis about how the last quarter was and how the coming quarters as well will shape up. We look forward to chatting up with you, and in case there's a deal in the next couple of weeks, well, we look forward to having you on the channel and we'll analyze that deal as well. Well, let's get back to the markets then. The Nifty is sitting with a bit of a cut. The good news is that the breadth of the market is more or less even Stevens, and the metal index is the one that's outperforming today. It's up close to around 1.5% to around 2%. You have Hindalco, Tata Steel, both of them are up in trade. And I think TCS, Rima, as we are having that cement discussion, briefly I think it went into the green. It's still sitting with a cut of around 0.5%.
Indeed. So TCS is down 0.5%, but HCL Tech and Wipro is where this, the stock where we are seeing some buying. So these stocks are higher by 1%. Infy is largely flat, but with a positive bias. We'll get into a break on that note. We'll come back and talk pharma once again. It's a special segment, Quarter Se Quarter Tak. We'll focus on Q2 pharma earnings. Sumit Gupta of Centrum will also join in.
Okay, welcome back. So you've got the market which is flattish, not very much going on, at least as far as indices are concerned. But it's earnings season. At least we're getting into it in the right earners. And it's our segment, Quarter Se Quarter Tak, where we get you earnings expectations from various sectors. Today it's Pharma we're going to talk about. Ekta is here to take us through what we can expect overall. Ekta, over to you.
Thanks for that. Well, for Q2 of FY24, analysts are expecting pharma companies' sales and EBITDA to grow around 8 to 10%. Profit growth could be as much as 11%, led by lower interest expenses. The growth for pharma companies this quarter is expected to be led by domestic formulations, which is the India business, growing around 10 to 11%. Company-wise, the likes of JB Chemicals could see a strong growth of over 20% due to the traction in ophthalmology. Torrent Pharma could grow 12 to 13%, led by better market rep productivity. Watch for Dr. Reddy's, which could see a good growth of over 10% due to the JV with Nestle as well. Coming closely to the US markets, companies could grow as much as 11%. Due to the strong growth in Sun Pharma specialty sales, expect continued traction in niche launches such as Revlimid generic as well as Dr. Reddy's and Natco and Spiriva generic and Suprep for lupin, and easing price pressure supported by drug shortages to drive the overall growth.
All right, Ekta, thanks very much for that. We'll sort of get to some of the other names as well in a bit from now. Ekta will have that glass of water. All right, Sumit Gupta is with us, AVP Research at Centrum. Sumit, good to have you with us here. Thank you very much for your time. So just the sort of big points to note here as far as when we navigate through this earnings season. Are there some common themes or factors which affect everybody? And then we'll get into specifics.
Yeah, hi. Thanks, Prashant, for having me. Good morning, everyone. So the common themes are like basically the pricing pressure has kind of like it is in the mid-single digits, 4 to 5%. However, there has been drug shortages which are supporting the overall prices. And moreover, if you see the niche launches, company-specific niche launches, just like Revlimid for some 4 to 5 companies, it remains a good opportunity for this quarter. So we see from company point of view also, these are just like for, let's say, for Sun Pharma, there's a specialty portfolio which is leading the growth on a quarter-on-quarter basis. So this is likely to drive the growth overall on the US part. And on the domestic part, if I come to, so basically we expect the domestic formulations market to do good for this quarter also.
So, Sumit, hi, morning. So, amongst the companies that you track, which is the company which is likely to report the highest growth? And secondly, which is the company where there is the risk reward is still favorable?
So we expect Sun Pharma to report a good growth. So basically, majorly led by the specialty segment and less dependence on the Revlimid part portfolio. So we are positive on Sun Pharma. Apart from that, Dr. Reddy's for this quarter can report a good growth in the domestic market, led by some of it, the Nestle portfolio integration. Apart from that, within, so it will be specific segments, let's say in domestic market only, just like JB Chemicals, due to the ophthalmology integration, it might show a 22% kind of growth, but however, on the base portfolio, it will be around 12 to 30% kind of growth, which will be much higher, basically 150 to 200 base kind of outperformance through the IPM.
All right, Subhath, hi, good morning. Good to see you. When you track the hospital space as well?
Yes.
There's been this hope with regard to, Healthcare Global, that deal effectively getting closed out finally. But we've heard that before. What kind of a valuation multiple does it trade at in comparison to the other hospital stocks? Because that's always been the cushion point, right? At around 250, 300 rupees. But now I think the stock is close to around 450 rupees. So what multiple does it get? And if there is a change of hands, what should it deserve?
Sorry, we don't track HCG as of now, but I think overall on sector basis, like we see good traction in the hospital space also. In the near term, there might be some concerns regarding the volume pressure, but however, we are positive on the hospital space.
What about a stock like Divi's Laboratory, Sumit? There is increasing optimism going into Divi's Laboratory. The stock is down well. There is a GLP opportunity. In the last 3 years, I was just seeing the stock price return. The CAGR has been a muted 4%. So it's been a bit of an underperformer, but now it appears to be playing catch up. So thoughts on Divi's Laboratory from here?
Yeah, so Divi is also not under coverage, but still overall, like you mentioned, just like the GLP opportunity is there, and moreover, the China Plus One opportunity that is going on. So these are kind of sentiments that is playing over the whole sector as a whole, be it in the all the CDMO players. So Divi is, I think it's one of the beneficiaries there.
Got that. I just wanted a quick word, Sumit. It's a sector where I'm assuming you'll agree, a lot of investors are bullish, right? Especially with that. The basic underlying driver is the first point you made, that pricing pressure has been dropping in the US for the last year and a half now, actually, right?
Right.
But stocks have done well. 2023, for example, many stocks doubled. This year, many stocks have gone up 40-50%. So where is the highest risk reward in that sense now, Sumit? Which stocks, in your opinion?
So in my opinion, companies like Sun Pharma, they will likely to continue to do well considering their portfolio. In the value chain, it is higher up the curve with respect to the pharma companies. So the specialty portfolio is doing good. The drugs such as Ilumya, Winlevi, Sequoia, Odomzo, all these are gaining market share on a month-on-month basis. So overall, I think it's a good portfolio, and Sun Pharma is quite comfortably placed there. Apart from that, Cipla is a second topic. So within the pharma, large cap pharma basically. If I come to the mid cap pharma also, so JB Chemicals and Torrent, we are positive on both.
JB and Torrent, got it. In terms of capacities, I think Aurobindo's got the highest capacities, right? When we talk about US.
Right, but won't be able to comment on Aurobindo, but yeah, Aurobindo seems quite well placed.
Aurobindo also is pretty well placed. Got that. We'll leave it there, Sumit. Thank you very much for joining us. Good speaking with you, and we'll touch base through the course of the earnings season as we start to get some of these numbers in. We'll need your expertise as we analyze those numbers. Bandhan, by the way, is up 8.5%. And that is, I think, one of the strongest names which is coming up on your screens. With TCS, I think there was one surge which happened after the gap down, but I think there perhaps may have been some little bit of pre-positioning, etc. All that got cleaned out, and now I think for the rest of the day you perhaps will see a more X the positioning from yesterday, kind of a reaction. We'll see which way that is. Infy should come up, and HCL Tech and a few others, as Rima and Nigel were mentioning as well. Look at what's happening on Credit Suisse at the bottom of the screen. That one is down about
Credit Access.
Credit Access. What did I say? Credit Suisse. Yeah. It's a Friday. So, but Credit Access, right? I mean, down 3%. Stocks done poorly. And it's interesting. Bandhan is doing well, of course, for stock-specific reasons, company-specific reasons at a time when microfinance is a space. I mean, the downgrade, for example, for Credit Access has happened because of the cycle and the states that they operate in and the elections and all that. We put that note out earlier. So, I mean, MFI, the cycle is turning bad. You heard from the RBI. They've also kind of highlighted some of these high growth areas as risky aspects. But you got a bit of a counter move going on in Bandhan because it never really went anywhere for the last 4.5 years or so. So that is a bit on Bandhan as well. Should we take a quick commercial break here? I think we will. We'll just sort of look at some more markets. There is, I think I saw some an order, guys.
Yeah.
Was it?
Yes.
Bondada?
Yeah.
Where that came from, but yeah.
Tata Engineering, they have won an order. I think it's a decently large size order, and it's one of those stocks I think that has been moving from strength to strength. I think in the last 5 days or so, the stock is already up 10%. Today, it's up another 5%. But in the last 6 months, the stock is up 170 points, 170%. They have won a large order. 1,100 crores is what they have won. But Rima, let's, since we're talking about various stocks, let's revisit some of those tech numbers. You can go for either or both. Tata Elxsi and TCS.
Well, Tata Elxsi is higher by 1.5% because at the bottom line, there is a jump of nearly 25% in the company's profitability on a quarter-on-quarter basis. So that's the reason why the stock is higher. But if you look at the core business, the revenues for the company are only up close to about 0.2%. Reported margins have gone up, but adjusted margins are lower for the second consecutive quarter. That's what's disappointed the street. The reason why profits are up 25% is one, because reported margins are higher. In Q1, the company had a one-off boost to their margins. So reported margins are higher. And secondly, even the other income is on the higher side. So that's the 25% jump in the company's profitability, which has pushed up the stock price higher. Now, the company operates in three large segments. Transportation, where they get a lot of revenue from JLR, etc. They have communication and healthcare. Transportation for the company has been doing very well. It contributes about 45-50% to the overall revenues. But the other two sectors, media and healthcare, have been, the company's been struggling on these two fronts for the last couple of quarters. So that's the backdrop. Tata Elxsi also trades at higher margins, but that said, it's underperformed its nearest peer, something like a KPIT technology. We should pull up KPIT Tech because transportation continues to do well. And while Tata Elxsi gets about 45-50% of the revenues from transportation, KPIT Tech is a 100% auto ER&D player, so where the business outlook is strong. But Tata Elxsi is also pricing in or expecting that things will recover for the full year. They are saying that FY25 growth to be better than FY24, which is 9.6%. But Mitesh is now with us for a quick tech check. Mitesh?
Yeah. Hi. So on the index, it's been a very quiet day, just kind of ambling around these levels. I've maintained that, this will be a market which is a sell and rally. So now the resistance is around 25,250 and then 400 levels. So around maybe 25,250, you would want to short it out. But till then, it's not giving you any kind of expansion. In fact, the market is showing signs of contraction. So it might just be choppy within a narrow range.
Any stocks that you would recommend for trade?
So on the stock, I think Divi's Lab is showing good continuation. So keep a stop below 59.50 here to look for targets of around 62.50. And it's been making new highs. So I think the good thing is that there's no historical supply pivot at higher levels. So could be a good trade. And that apart, I think Glenmark is also a trade on the long side with a stop below 1760 for targets of 1845.
Okay, all right, Mitesh, the other part of the index which has been struggling to find its form, it's Reliance Industries. Now, that was a leader, all the way till I think 21,000 odd. And from there, it's been a relative underperformer. Where does support come in for Reliance Industries? And do you think the stock is seeking lower levels or it's forming some kind of a base to bounce back up?
See, Reliance, in fact, is at the support level. The monthly averages kick in around 27, 30, 40, and we've had a low of 27.22 for the month. And also, I think, we got a closing low of 27.40 on the 7th of October, and yesterday was 27.42. So kind of, trying to make some kind of support around this 27.40-30 zone. I think, this is long-term bottom as well. I think long-term support area as well. I think it's very important that the stock holds on to these levels. So in case we see some reversal about 27.70, then I think, 75, I would even want to venture along with a very tight stop of about 30-40 points and a bounce back to about 28.40 levels.
Thank you, Mitesh, for joining in. Now, moving on to another big theme in the Indian market, and that is the rise of Indian beauty and personal care market, known as BPC. Now, according to Rathi, the BPC market, which stood at $21 billion of size as of 2023, is likely to increase to $34 billion by 2028. So we are talking about a growth of about 10 to 11% from 2023 to 2028, a 5-year period, with the online channel likely to grow even faster. This is driven by a surge in online penetration and a growing preference for high-quality premium beauty product. Even Trent, remember, announced its foray into beauty and personal care. They said that they will be selling these products at accessible price point. So the street is very excited. We have with us Biju Kasim, the CEO of the beauty business at Shoppers Stop, joining in, and Mrugang Gudgutia, the partner at Rathi Strategy Consultants, also with us on the show. Thank you, gentlemen, for joining in. Biju, let me start with you. Now, for Shoppers Stop per se, the beauty segment contributes about 5%. Can you tell us, have you seen a seminal material pickup in the kind of sales for beauty sales? Because last quarter we have the numbers and that was still about a 5%. But are we seeing an increased growth in the BPC market? Can it hit double digit for the next 2 or 3 years?
Absolutely. I think from a context of Indian market per se, there's been a lot of adoption to BPC overall. So, but particularly coming to the prestige segment, I think it's growing quite strongly. More so, we have seen a lot of slowdown in China, and there's also a lot of expectation. So it's also built up on the fact that brands are putting a lot of investment, and they expect to see very, very strong numbers coming from India.
So for you, it's about 17% of your overall revenues. BPC as a percentage of Shoppers Stop's revenue. How much can it go up?
Well, there are two situations here. One, for us as Shoppers Stop, definitely the ambition is to go beyond 20 and even further. But the opportunity that we see for India, because, BPC, particularly at the prestige level, is still at a very nascent stage. The penetration is still very low. I think all retailers, for that matter, all beauty players have got a very important role to play. This is about the education and to bring consumption to a next good level. So I foresee for the next 5 to 10 years, very, very robust growth coming in this segment.
All right. Hi, Biju. Good morning. Good to see you. And you're sounding rather confident about growth from here on. So a couple of questions then. If it has to go past the 20% as a contribution, then by when does that happen? What are the kind of investments you're making in this beauty segment? And what about the margin difference between beauty and the, extra beauty business?
So, at Shoppers Stop, we particularly believe in three philosophies. One is the expression, because I think today beauty needs to be represented in the best and the most glorious form that it deserves. Our Western counterparts or the American counterparts have really presented it well. And I think at Shoppers, one of the key desire is to bring to life the exact capturing of the beauty of the brands. Second is about engagement, which is about getting the Indian consumers to engage, to touch, to feel, and to really have the pleasure of using the products. And the most critical element is the education, because beauty, especially at the prestige level, is not so much of a habit. So it's about educating consumers as to what is critical about using them, how to use them when it comes to skincare, makeup, etc. And these are the three core pillars that we really work around.
Oh, but to scale up the business, you'll be investing money as well. Do you have a number in mind? And also, what is the margin difference between beauty and the other part of the business?
Well, infrastructure, particularly in terms of investment on capex and things, definitely is very, very important. When we talk about expression, obviously it comes with a lot of investment. In case of margins, I would not really want to go into the details of it, but largely beauty is not as margin efficient like other categories. But I think the SPSF, the sales per square foot, is what we actually work around.
Gentlemen, morning. Biju, just one question. It's also, of course, a sector where there is intense competition, right? So brands like you have your products. You, of course, also retail other products. You got celebrity products. Influencers in the market with their, at least a few now. Of course, larger groups all getting into the space in an aggressive way. Foreign products also. Is this going to remain disaggregated, or you think like some of the other categories, this will coalesce around, say, 3, 4, 5 larger brands or categories? Your thoughts?
So basically, there are two elements to it. Look, as I mentioned at the beginning, India for every brand is super important. So definitely everybody wants to get that pie. Secondly, and I'm talking from an international perspective, whether it is the P&Gs of the world, or the Cotis of the world, or the Shiseidos of the world, or the L'Oreals of the world, or the Estee Lauders of the world. So that's something that you will see more and more active involvement coming from international brands. Secondly, there are many active retail partners. For example, when we talk about the recent past, it is really, really heated up. Obviously, we have the D2C brands, you have celebrity brands, and so on and so forth. My take on it is India still is at a very, very nascent stage. And it is a responsibility of all stakeholders to really grow the market. And there is so much in it for everybody to feel very comfortable and confident and continue to keep investing.
Mrugank Gudgutia, partner at Redseer Strategy Consultants, is also joining us on the show. Thank you very much, Mrugank, for joining in. Can you break up the Indian BPC market into mass, mid-value products and the prestige segment? There's $21 billion of size. If you could break it up in terms of revenue contribution and also the growth that we're seeing in these individual three categories.
Sure. I think the mass and mid value, as you would imagine in the Indian context, that still accounts for a pretty sizable chunk of the market. You could, as per our estimates, it's probably together closer to 3/4 or even 80% of the market. But if you talk about the premium part of the market, right, anywhere between 15 to 20% share coming from that, and that is a segment that is growing a bit faster than the total pie. So the total pie is growing at about 10-11%, as we saw earlier in this on the screen, and the premium part of the market is actually growing about significantly faster than that number. So that's a segment where there is a premiumization taking hold, and customers are getting aspirational, experimenting with ingredients, and obviously getting access to the right kind of global selection, which is kind of motivating them to obviously spend more on the premium part of the market.
So the premium market is growing at what percentage? If the overall market is likely to see a 10-11% kind of growth, premium would be 15%, 20%?
Yeah, I think it's in excess of 15%, in fact, in the premium segment. So that's a very attractive segment. And of course, even on the mass and the mid market, there are pretty good growth rates. But premium is where, in fact, a lot of action is happening from a brand lens as well as our option lens. So yeah, plus 15%.
And how have platform companies performed? So say something like a Tira, they have an online and an offline presence. How has the performance been? Are they getting market share from, say, the likes of, Shopper Stop, for instance?
While I wouldn't like to comment on individual companies, but I would definitely like to say that given the very, very early stage at which the market is operating, right, in terms of the beauty consumption, it's only just coming through in smaller cities, in the tier 1 cities, and so on. So there is definitely a need for some kind of an omni-channel play, so that you cannot just do well only with online or only with offline, perhaps, or at least offline component is important. So we see these brands and platforms launching the offline experience centers, educating customers about brands, skin type, ingredients. And in our minds, all this competition is healthy and will play a role in educating and scaling up the market. I mean, the per capita beauty consumption in India is still super low compared to all international benchmarks. And especially in smaller cities of India, it's extremely low, right? So the catch-up potential is huge. And all these suppliers need to come in from various formats, products, price points to build this market.
Per capita spending in India on beauty products compared to, say, rest of the markets?
Yes, absolutely. It's very, very low. So out of a 1.4 billion population, obviously, we have just about a $20 billion of beauty consumption, right? So that practically translates to about $15 a year, right, per capita. Let's say if you take China's numbers, the figure would be at least 3 to 4 times higher in developed world. Obviously, I'm not even getting into the comparison. So that delta is huge. And then if you look at the big city and small cities, the non-metros are consuming 1/5 beauty per capita, right? So 20% of the big city consumption, 1/5 of that is, happening in the smaller cities. So not only is it catch up possible with global benchmarks, but even within India, there is huge disparity in the amount of beauty that is getting consumed. So a huge catch up potential domestically, across the cities as well.
All right. Thank you very much, both of you, for joining us. Good speaking with you, and it's a discussion which we will pick up as this market continues to develop and more and more products, more and more players continue to enter. We'll take a break. Commodities in focus. Manisha will be with us on the other side. Stay tuned. Okay, welcome back. We've got the market, which at least on the indices are not doing very much. But let's focus on the commodity markets. Manisha is standing by with what's top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices, which have seen gain of almost 10% over the week. Now we're looking at 3.5% to 4% of a jump up in both the crude varieties overnight. And with that, the crude oil prices are headed for a second weekly gain herein. We are holding around $78, $79 per barrel for the Brent prices at this point in time. Well, there are three major factors which really seem to be supportive of the prices. One is the increasing risks for supply disruptions, and most of it comes in between from Middle East there. Now, Israel is saying that they are are looking at a very precise, timely and retaliation against Iran. The Israel Security Cabinet has met and it will be discussing time and response to Iran attacks. I mean, this always comes in as we are heading into the weekend, and you will always see that in last 2 or 3 weeks we have seen buying positions accumulate on every Friday there. The second disruption comes in from Hurricane Milton in Florida, where 3.4 million houses are out of power and almost 25% gas stations are out of gasoline. So there is going to be a lot of demand in this region as and when we see the supplies come back there. That's the second reason that you have seen supporting the prices there. And then it also is about China measures, where there is an expectation that China will unveil draft laws to promote private sector growth. There also is an expectation, there's a time set as well, by the way, for this Saturday, where the Chinese finance minister will do a press briefing laying out the details of all of those policies that the street is awaiting. It is also about the IEA, which says that the supply has continued to decline in the global markets there. Well, the OPEC in any case is cutting supplies, and when you look at the US markets there, from 1.8 million barrels per day of production in December 2023, by the time it was September 2024, it's less than half at 0.7. So the production there as well seems to be declining. So whether it is about war premium, China coming out with more stimulus, or the production that continues to decline, all of these factors are quite supportive. A very interesting report that I was reading from Bernstein overnight, which says that if there is escalation in war in West Asia, then you are looking at the crude oil prices going to $100 a barrel. I mean, that's a scenario that they're not ruling out. But if there is a case that you see much of this tensions come down, then $70 is where they're looking at the crude oil prices. They do not believe that the prices can go to mid-60s or such, which many of the other banks and brokerages, by the way, seem to be talking about. A final chart will tell you on what we've done in sense of prices. So week on week, we are up by 2%. And in last 1 month, the crude oil prices have gained up by 10%, with uncertainties just continuing.
All right, Manisha, thank you very much for that. So that's commodities in focus. Well, let's take a quick commercial break here. On the other side, it's our discussion on It's the Economy. My colleague Lata will get chatting with Piyush Gupta of CRISIL and Suyash Chaudhary of Bandhan Mutual Fund to discuss if India Inc.'s cost of capital is heading lower. Stay tuned, that's coming up.